very good evening to you traders. It's Mark here from the Day Trading Room. The time is approaching 20 past 7 on a windy Sunday evening, London time. And just reviewing last week's trades, but really preparing to get back into the swing of it next week. I was away doing other things a couple of weeks ago, and obviously last week, Monday, we had Labor Day. And when I came in on Tuesday and Wednesday, really, if I've been away from the markets, I was trading some of the open from the prior week, but generally, the more time you spend away from the markets, the less you can rely on your feel. You need to get back into the feel. You need to immerse yourself in the markets. As much as I want to get back into trading and back into trading with my normal size, I have to remain. I have to take a step back. And so if I've taken a time out from the market, come back in, the first day I won't trade. I'll just sit and I'll watch. Of course I will thinking of trades in my head, going through the same routines, pre-market, at the open, watching the tape, doing exactly the same thing, but not putting any money on the line. I guess you could use a simulator if you wanted, but I prefer just to sit there and just try and gather all the information. I'll be a little bit more active on news, getting the information from the news. What's the market looking at? What are the levels that the market's adhering to at the moment? What type of phases the market in? All these things I'll just start to get my feel back for the market, because if you've been away and you come back and you start to trade aggressively, you're almost guaranteed that you're going to take a hit. It's just the way it is. If you're not in tune with the market, you have to have the feel for the market. So Tuesday and Wednesday very light. Tuesday nothing. Wednesday very light. Thursday back more into the swing of it, but it was rollover day on Thursday. So again, light, being cautious, not going straight back in with full size, reducing size a bit, just taking last week as a time to get back in, getting ready, becoming more aggressive next week if the market allows that. So let's talk through Thursday's trades. Thursday for me was wasn't great. Two trades just about made a profit on them, but the entries were poor. And this is proof really that you need to immerse yourself in for a couple of days, get back into the swing. So let's talk through them anyway. This really was, we started to push up, but again, usual thing on the gaps, two hypotheses, guys. The pushback, the drive lower, the pullback, the jump on, or the surprise and the gap fill. Same for either direction. So as we started to push higher, it looked like we were going to fill the gap. That's what I was playing for. And by the way, the cash gap, if you weren't wondering, is, where are we? There we are, just there. If you can see that there, that's the cash gap at the time, which is above 11,400. Now I took this trade, we pushed on, very late read for me, very late read, very unlike me to get on it this late, but you know, no real excuses, just a poor entry. And it was on this candle here, and I ended up taking an awful lot of heat, and it was into my stop zone. Now a few people have asked me about how do I use stops. Now depending on the market conditions, but I'll just tell you what I do generally. I'll have between a 10 and 15 point stop. Now that's based on my tape reading ability and assuming not huge volatility. When we have huge volatility, the game changes, but for standard volatility, or what I call normal volatility, 10 to 15 point stop, because I know that any trade that goes against me more than that generally goes a lot further and I've just completely misread it. So that's what I'll do, and I'll call that a range, because what I will do is 15 points is my hard stop. If it goes 15 points against me, I'm stopped out, take it, done, dusted. If it goes 10 points against me, I give myself another 5 points to assess the situation. If it looks completely bad, it's a bad trade, I will close the position for minus 10. Okay, which is why most of my trades stops are between minus 12 and minus 15. So between minus 10 and minus 15, so in other words 10 points of heat and 15 points of heat, I will assess. Now this gives you, this is too powerful. I find this a powerful way of using stops, because it gives me some flexibility with a 5 point range, but at the same time I don't have to make any decision when it goes 15 points against me. I'm just straight out, chop the trade, forget about it, because I know that generally if trades go 15 points against me, my tape read has been very wrong, and if it's been very wrong, I do not want to hold on to the trade, so cut it straight away. So I give myself this 10 to 15 points leeway. So what happens when it goes goes 10 against me. When it goes 10 against me, I'll assess. I'll look at the trade. Do I still want that trade? Is the premise still valid, but it's just stretched a little bit? If that's the case, then hang on. Hang on for a bit. Let it go. I can have a little bit of room, got 5 points of wiggle room there. Doesn't sound a lot, but this is based on just data I've gathered throughout the my time of trading, my accuracy and take reading, etc., etc. So 10 points against me, I assess the trade. I reassess the trade and say, hey, is the trade still valid? Is it just a little bit of a poor entry on your part? Would you still like to take the trade if you weren't in the trade right now? If those answers are yes, then I've got myself a little bit more room to breathe. If it goes 15 straight out, I don't reassess it, but between 10 and 15 I can reassess, which is why often you'll see me take a minus 12, minus 13, something like that. That for me is a full stop, or maybe you can take it for 15, but that for me is a full stop, because if I've assessed it and I said, you know what, nah, this doesn't look great, tape's turned on me, I can see that the market's changed, I don't want it, so I'll cut it. So that's really generally, not all the time, but generally how I will use stops. So what happened here? Well, let's take this drawing pen off and get back in. Took the long here, very late, very late. Ended up chasing a bit. Took a reasonable bit of heat. It was in my zone, which is why I talked about it just there. It was in my zone, but I was happy with it. I was happy with it. I liked this strength. Okay, we were coming up from a gap position, but the ticks were okay. One thing against me was the fact that 11,400 cash was there, but I thought it had enough legs to fill the gap. Why was it a bad trade? Because it could have quite easily come down to this level. Let's not cloud this with a drawing pen. It could have quite easily come down to this level, guys, even right down here, and been valid. So really it wasn't a good trade. I got away with it. Very aggressive first scale, and then I got the gap fill there on the cash. We didn't even fill the gap until later on the actual futures, but hey. So that was that. A little bit cautious on that. Remembering it's rollover day as well. Second trade for me, I was sitting out through all this. I was saying, listen, I wouldn't mind taking 1,000 tick push. That's my trade. I don't really want to get involved in this. The ranges weren't great. Didn't feel great. Didn't feel like I had a great. I wasn't in tune with it that well. So yeah, took the 1,000 tick reading here. Great little entry. A few ticks off that high. Sat with it, thinking, okay. Well, actually, my feelings were when I took this trade. This just shows you how out of tune I really was with the situation. My feeling was that could be the high of the day, and we could get a nice swing back to the VWAP. That was the premise of the trade. And normally, I'd sit with it and do that. So I didn't take any scales off here because I was thinking, okay, I'm looking for longer targets on this trade. Came back, and we started then to go against me. Now, again, we're in the situation of what's the stop zone. I don't know why I didn't scale. I would normally be scaling there, but because I was looking for that further move, because my size was smaller, getting rollover day being first day back really, I didn't. I didn't do it. Should have done it. I didn't do it. But anyway, so I ended up sitting through this. This went against me a little bit, and I was saying to myself, am I still happy with the trade? Yes, we've put a few wicks in here. The volume's nothing. There's nothing. Ticks, we get a bit of a divergence on the ticks there. Okay, stick with it. If it pops up against you, fine. Take it out. Call it a day. And then we rolled over, and I was just so eager to get the trade out. I ended up taking it as we put this a little bit of downdraft in here. So bang, bang, out. Didn't even hold for the hypothesis of the trade, which actually worked out well. But there, we're not perfect. These are the sort of mistakes you make when you're not in tune. Reality, should have done there was probably take the 10 off there. Assuming it gave 10, I'm pretty sure it gave 10. That might be why I didn't take it off actually. It might not have given me the full 10. I think I might have been in there. Yeah, that might not have given me the full 10 actually. I was looking back thinking, why didn't I take that off? But it does come back to me now. I might not have given me the 10. I might have been just out with that. So anyway, that's what happened with that trade. I don't need to dwell on that too much. Okay hypothesis, bad tape read. No, good tape read, but it just didn't give me enough on that trade, and I didn't trade it as well as I could. So yeah, I didn't trade the rest of the day on that. So let's talk about Friday. Friday's been a little bit more active for me. Hypothesis at the open, usual thing with a aggressive down day. Same thing, guys, as before. Looking for that little push at the open, and then getting on short on there, or a drive. If I don't get on it, pull back and get short. That's looking for that, or the gap fill, range fill, which would have been up here. Okay. Um, so traded up pretty much at the opening print. We got a drive. There's the opening print. I can't see it very well, but it's shaped like this. This is the candle. We got a drive higher, and then we got the subsequent push lower. So open, we drove higher, watching the tape, watching the tape, caught that beautifully on the turn, waiting for those buyers to dry up. I didn't think they had any legs in them, but if they did, you know what, I would have stand back and looked for another trade, waiting for those sellers to come in. Bang, or did they come in aggressively? Anyway, got the short, beautiful short on that. Didn't have to wait long to get a nice scale, scaled into there. Excuse me, scaled into there, and re-added on that position there, because this was such a nice little move, such a good downdraft, really tight consolidation there. Tight flags, anyone who's done the course knows, those are the ones I'm looking for. Nice little tight flag on a good downdraft. Ticks are really weak, volume's high, everything looks great. Everyone's running for that door, and that door is small. So bang, in again, adding that what I took off there. Really shouldn't have taken it off, to be honest with you, or extra aggressive, take it all off, or double up, or if you're being, I wouldn't catch me doing anything like that. I say it in jest, doubling up, but if you're that kind of trader, these are the days we can really squeeze the most out of that trade. So anyway, still in that trade, added the position down here, and then as we push down to this last dip here, we didn't get that, got 1,000 ticks, didn't get a new low in ticks. I'm all out of the position. Missed a good chunk of meat actually for the last bit, but yeah, hey, a good trade nevertheless. Don't forget, still get back in the swing of it. No need to be too aggressive just yet. We've got this little counter trend pullback here. This took a while. Ticks came back to zero, popped above. Beautiful textbook stuff. VWAP. I'm having another go at this one. Rolled over. We had a little bit of a scare here as it pushed back up and tried to break, but it didn't. Rolled over. Bang, all out. Actually, that I just didn't like that action there. Which is why I was all out and not scale. So left a bit on the table, but nevertheless pleased with the trade. Final trade for me on Friday was this, and this is interesting actually. Again, this was another one of those stop zone almost trades. Didn't quite get there, but it was that sort of position. We've been chopping around, and I was looking for some sort of surprise move to get on. That's what I was looking for, and this is what we got. Really, we broke the low of the range, pulled back. There's the low tick, pull back. I like to take these. These are my sort of bread and butter trades. Pulled back, didn't quite get to zero, but you're never going to get it perfect. So I took the short there, rolled over as we approached that low. Bang, there's my first scale, and I'm starting to think, okay, 11,000 cash is not far away. So that's the target for the trade. I'm looking to hold at least a good portion of the trade. Take the risk off, always take the risk off. Okay, yes, I know I didn't do it in the earlier day. That was probably though because I didn't get the full 10 on that. But a quick mention on that, sometimes depending on the ATR of the day, which is what I've got down here, the average true range, I haven't looked at it for a while because it's been pretty much fine, but if that's going slow, you might have to reduce those first targets to perhaps 8 or even 6 if it's really slow. But touch wood, haven't had that problem for a while. You know, the market's been active enough to take your 10. But anyway, so took the first scale, we started to push back up here, and I'm reassessing. Do I want to be in this trade? Should I take the stop out? I've tightened my stop level up to break even plus a bit, so I'm giving myself, you know, sort of 10 ticks of leeway from the break even. I don't want to turn into a loser by any means, but at the same point, I don't want to be too scared of the trade. No need to be scared of the trade. The premise is there. There's a nice target. Everything still looks okay. You know, this is going to happen. You're going to get these highs. You're going to get times when it will just pop above, and you need to reassess at that point there. So that's why I've highlighted the ticks here. They popped above. They came down immediately. The price popped above. That came down immediately. It's all about what I call response. I talk about this a lot, and I've drawn that with my mouse, and that's not even too bad. It's all about price response. What is the response of everything to price action, market action? So as I pushed up here, I'm looking. Any buyers stepping in? If any buyers step in on the tape, bang, ditch that trade. I do not want it. I'm waiting. It's buying's pathetic. There's no legs to it. Sellers come in, step in, great. Now we're talking. We're rolling over. Where's my 11,000 cash target? It's down here. I had to sit through a little bit of pullback here. That's no problem. Ticks were fine. Push back lower. Great. Got the 11,000 cash trade. Very, very tempted, mind you, very tempted to take it out here with those low ticks, but it wasn't far away, the 11k. In fact, we almost tagged it. I think we got to 6 or something like 11,007. So but stick with it. You've got to sometimes stick with your premise as a bit of a discipline exercise. Sometimes, guys, that's what it's about more than anything. Got 11,000 cash, bing, and that was me done for the day. Left it, came back, did look in, saw a little bit of trying to take the bulls trying to take the 11,000 cash. They poked over, didn't quite get the close they wanted, and I think we closed 10.992. So going to be interesting next week. Hopefully a lot more volume coming back in. Everyone's had their holidays. Some holidays are done. Time to refocus, get back up to the normal position sizing. Monitoring everything that's going on, still being a little bit cautious. When I get back in tune with it, then I'll put my foot back on the throttle and start to do more trades, take a few more setups that aren't my bread and butter type of stuff, start to look a little bit further afield at some of my rarer setups and setups that perhaps don't work as often but yield a little bit more profit, so a little bit more risk. But as long as it's managed and you understand what you're doing and everything, all the hard decisions in terms of position sizing and stop placements are done before you take in the trade. That's what it's all about, guys. Risk management. So I hope you all had a great, fantastic week. Hope you all had a relaxing weekend, or wherever you are, still enjoying a relaxing weekend. Looking forward to some good trades next week. As always, keep that risk managed and take care. Be back with another video later in the week.